In other words, you can already look at this chart, say, for example, on oil. And you can already look at this on oil and say to yourself, well, let's take a look at volume and price and see if I could find a trade on this without looking at price charts. There's no price chart here. There's only arbitrage. There's only information that comes from arbitrage. Loads of different calculations that gives us different ways of looking at arbitrage. So you'll be able to look at this and say, well, there was a possible trade coming in, in different areas. We can see here, remember this is a 1 minute chart we're back on. The last trade we can see was right here. It looks like an exhaustion print right there. But worst case scenario, bearing in mind that this is a 1 minute chart, is I could buy oil there because I know it's a red candle because I can see it's a red volume. But it's not the kind of candle that I'm going to be massively keen to explore in terms of massive profits. I'm going to buy this. 60 seconds later, I'm probably going to be taking my money off it. Did I make any money? Did I make any money? Let's take a look. If I bought that red candle at the close, did I make any money? I bought it at $87.17. It traded a high price eventually of $87.26. I made 50 bucks, 90 bucks, and I scratched out my position. 50 bucks, 90 bucks, scratched out my position at +1. So I made 50 bucks and a $10 profit. I made 60 bucks, or it just simply scratched out my trade for $20 on a 2-lot. Do you care? If you're making 20 bucks and minus your commissions, do you care if it scratches out? No. It doesn't make any difference, does it? The idea is that you had a easy money profit, you were able to get stocks at break even, and you had a massive 90+% probability of making money in the next few seconds. And we can recognize just how nice that opportunity was. It wasn't the best, I'm not claiming it was, but you can see this is a bullish marketplace at the moment, definitely a bullish marketplace. And obviously based on that, we're trying to get into that buy trade narrative. We're trying to find a way into the storyline. We're trying desperately to get an opportunity on a time frame that we can see the trade evolving from. Now, I don't think there was any time frame that we saw that trade starting to evolve, but we have additional ways of improving on this narrative. You might think that 2 lines are good, but when you add a 3rd line and a 4th line, you start to recognize how good the lines really are. Take a look for yourself. So we've talked about being able to trade this based on index arbitrage. And obviously, when we start developing out the index arbitrage narratives, take a look at this line here. All of a sudden, crazy things appear. All of a sudden, you start seeing value changing hands from purple over blue to purple below blue. Do you see that? Purple over blue to purple below blue. Do you see how easy it is to spot the change in context? So the change in context takes place up here, doesn't it? The change in context takes place up here. You start seeing that change evolving into that area. Context, 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 and context. Changes in narrative building processes, guys. This is a 5-second chart, by the way, 5 seconds. So when we see these changes in context, well, that's what we're looking for. We're trying to find what is changing, how is it changing, how can we make money from that narrative change? How can we start seeing these as real money opportunities? Changing context equals money in our bank account. Simple as, guys. Okay, let's catch up with equities.